Alright, yes guys, welcome back to another video on the channel, and it's been such a week this week. Absolutely amazing price action. Now, for those of you that didn't make money this week, it's okay, it's not a problem, but many of us did. So congratulations to those that took that lovely short on Thursday, Wednesday, Tuesday, and the long on Monday. Now, this week was enormous, and for those of you that are new to ICT or still trying to piece things together, it's not a problem. Price action's not going anywhere. We have good weeks, we have slow weeks, just like the past month before last week, just like the past month before the week that has just gone. It was very slow price action, and it's soon to come around the corner again. It will go slow, price will start to pick up again, and it fluctuates. We can't put a pin on when good price action is. Yes, it does tend to be March and April. Now, I want to make things clear on social media to you guys. I don't know how much longer I'm going to be around on social media, as I plan on different things with my life. I've helped many people all over YouTube, Instagram, across multiple platforms, live trading in front of an audience for over a year and a half. People have received 6 figures, 7 figures in payouts. Literally, I have proof like you've never seen from any other trader on social media. Now, the thing that separates me from others and why you guys tend to tune into my videos is because I don't bullshit inside of my videos. I'm very straight to the point, simplistic, precise, and I don't beat around the bush. We go straight to the point, just like we are inside of this video. I am going to explain the unicorn model to the point where it's so simple, it couldn't become any more simple. Now, this video is including risk management, daily bias, psychology, and the whole model A to Z, including the trades broken down for you of the ones that I took this week. Now, you're probably thinking, Milo, how much money are you actually making? Well, I decided to submit a payout from my live account, which I rarely do. Now, I've told you guys I don't withdraw from my live account, and I fund my lifestyle from my payouts from prop firms. Now, this withdrawal, which you can see on the screen here, of $71,000, $70,000 of it, because I overdone it a little bit because I believed there would be some fees, and I didn't want to waste time. So $70,000 of it is going to Dubai, because I'm buying a new house. Now, this is only an apartment, not for myself. It's a down payment, and I'm renting it out each month, and there's going to be a good return. And I'm looking to purchase multiple. This is my first apartment in Dubai. I have 2 in Miami, and obviously I'm looking to scale up in Dubai and get more into real estate. Now, social media is not a long-term thing for me, and it's not something that I look to scale up to crazy levels where the whole world knows my name. I'm just here to change their lives, affect and guide the people that need it the most in the right direction, so you guys can receive the same results. Now, I don't sell a course, I don't sell a signals room. I have done live trading in the past, and everyone who's joined and followed the model correctly has been paid out. You can see the testimonials in my Instagram highlights or wherever you want to look. As of now, I coach around 4 people on a one-to-one mentorship. 4 people, and 5 people who were with me previously have all been paid out. For example, I had Danny as a one-to-one student. He's from New York. He got paid out 28K. So I decided to book him a flight from New York to Miami. I met him in Miami. We came, we bought the Rolls Royce, and then we had a great day together. That's a video documented on YouTube. Then I have another student called Marvin, and we are very good friends. I met him in Houston. He got paid out around 3.5k USD, which was amazing, but then I helped him scale and gave him the guidance to get to the next point. So now he's just sent me a message and been paid out a further $10,000 plus. And just this week alone, he's done 10k, which is absolutely insane. And guess where he is right now? He's usually in Houston, and he texts me randomly that he's in Puerto Rico, smoking his first cigar ever. Crazy stuff. And I'm not even trying to sugarcoat the model, but if you follow it correctly, there is no reason why you don't take the same trades as me. We both visualize and see price every single day, the exact same, with the same thought process and the same structured approach each day to both of us taking the same trade. I have another student called San Muka. These are the students that have already passed through the mentorship and finished. He got paid out 3k at the start. We used the 3k, I helped him scale up, and he just took another 5k just from last week's trading with Top Step. Absolutely amazing. Obviously, Top Step's max payout is 5k, so he took the max 5k, and he's going to take even more once he gets another 5 trading days, which is amazing. Now, this was a payout that I got just a few days ago. This is an FTMO payout that I received just the other day as well, sent by USDT, $35,000, and this is a Top Step payout of $47,900, if I believe my maths is correct. This was over a month ago, but I thought I'd just put that in there as well so you guys can see the top step payouts as well. Now, I'm working with other prop firms, and yes, I've made more than this 70,000, but I wanted to take it out to put it down on a house. My live account is severely scaled up, and I'm slowly graduating away from prop firms and just focusing mainly on my live account to grow that and have longevity of my live account than longevity of prop firms. I have, over the period of 2 to 3 years now, taken the money from prop firms and applied the 60-40 rule. 60% of my payouts go into my live account and 40% go to random stuff like food, rent, lifestyle, etc. Now, with the videos I've provided on my YouTube channel, and this video alone is all that you need and is the guidance to you becoming profitable. Now, it's going to take time. The knowledge is provided in this video, not rushing the process like an idiot, because many of you're going to start on Monday of next week and try rush the process again, and it's going to send you all the way back to square one. So I'm going to get into more detail about that. Now, the first main topic that you need to understand is daily bias. Now, no one on YouTube to do with ICT concepts, no one determines daily bias like me. I am the creator of the way I determine my daily bias. Now, thank me for this in a non-narcissistic way, but this is the most simplistic and most effective way to determine daily bias in the whole industry. I don't care what concepts you trade, this is the most effective way. Now, we only determine bias purely off imbalances, nothing else. We do not use order blocks, sweeps of liquidity, mitigation blocks, breaker blocks, or other ICT key PD arrays in order to determine our overall bias. Just imbalances. We are going to get over this inside of this video so you guys fully understand the ins and outs of determining daily bias. And I am sure I will explain it to the point that you fully understand it in this video in around literally 5 minutes. And then we will get onto the model. So when you approach price inside of the New York session, you want to mark out the key levels as your first thing. I suggest you do this around 9:20 a.m. New York local time. That's the time that you get to the charts. You start on the 15-minute time frame, you mark out levels which are obvious on the 15, so 15-minute swing highs, lows, London, Asia, previous day high or low, previous week high or low, obviously new day opening gaps, new week opening gaps, data highs, data lows if you have news at 8:30 or at 10 a.m. or at 9:45, obviously equal highs, equal lows, etc. Now these are the levels that you want to mark out at 9:20. The point that you determine your bias is going to be around 9:40 a.m. Now the biggest misconception of daily bias on social media from unprofitable traders is that once they have determined their bias at the New York Open, they stick to it all the way through the whole of the New York session. Price runs 300 handles up, 300 handles back towards sell side, and they're still running the same bias. Now, one thing that you must understand is when price is moving into other opposing imbalances on the 4-hour, the hourly, the 5, the 15, your bias is changing. Now, if at the New York Open you determine a bullish bias and price runs 100 points and takes out London highs, you should be assuming that your bias has changed. Now you need to redo your bias and double check that you still have the same bias. Has it changed? Now we are going to get into this in more detail. You start on the daily and you get a result, and you have to picture this like a checklist. You're getting the daily, you're understanding the draw on the daily candle, and you're getting a result. It's going to be bullish, bearish, or neutral. 4-hour, you get a result. Hourly, result. 15 and 5. Now you're going to get 5 results when you determine your bias every single day. Now with these results, you're going to see it's either going to be majority of the results are going to be bullish, so 3 out of 5 bullish, therefore you have a bullish bias. 3 out of 5 bearish, then you have a bearish bias. Or you're going to have a neutral result where everything is 50-50. What do you do with a neutral bias? You want to approach price and let price give you a bias. Now, if you don't have a bias, price will give you a bias. On a volatile day, you will go from neutral, price will then take out a point of sell side, a point of buy side, trading into opposing imbalances, and then price will start to lean towards a bias. And if it doesn't, you do not engage with price and you do not take any trades. It's like shooting a gun and not knowing which way the barrel is. You're going to blow your head off. So of course, a strong bias is when all of the time frames align with each other. That's the strongest bias. Now you don't need the strongest bias, you just need a bias that leans towards more in one direction than the other. Now we will get into bias on the charts later inside of this video, but I want to go over the actual model itself in a checklist based so you guys fully understand the steps to taking a trade. These are the steps, and this is the whole of the 2022 mentorship plus more and all of my knowledge into entering a trade. Nothing more, nothing less. This is very black and white. The only color on the screen right now is red and green. Now step number 1 is that you have your bias. Following your bias, you want to see a sweep of liquidity. For example, with a bullish bias, you want to see a sweep of sell side. With a bearish bias, you want to see a sweep of buy side. Now, a majority of you guys watching this video are going to know that, and that sounds very simplistic. That is step one. Now, once you have that and you've swept buy side with a bearish bias, you want to see a displacement, which is a shift in market structure, call it whatever, it's the same thing, on both NQ and ES. So price displaces lower on both NQ and ES. Now you're going to look to see between NQ and ES, do we have a fair value gap on both NQ and ES? It doesn't have to be a breakaway gap like this one, just a gap on both NQ and ES. Now with that gap, it doesn't have to be on both. Do we have a breaker block or a mitigation block paired with a fair value gap on either NQ or ES? You either have it, yes or no. Now a breaker block or a mitigation block, the difference is that a breaker will take the high or low before inversing the order block, and a mitigation doesn't. Now an inverse order block will turn into a mitigation block or a breaker, and the difference is between did it take the high or low before inversing it. Not going against the 5 and 15 minute draw, this is not essential, and this will deter the difference between your trade being A plus or B plus. Now you will still take the trade either way. What this generically means, if you're taking a short and you're inside of a 5 or 15 minute bullish gap going against the trade, it makes the trade B plus, and then initially you can still take the trade perfectly fine, but you'd understand that is a B plus trade. You still take it with the same position size. The only point that you start to reduce your position size is if your overall drawdown is affected from a potential losing streak that has endured on your account. So if you start a 50k account with a 2k drawdown and you drop below 1500, from that point you are going to be on half position size until you get back above 1700. Now per trade you risk on a funded account $300, but we are going to get into risk management and have a full scaling guide just in a couple slides inside of this video, so do not go anywhere. This video is extremely important for your success to do with ICT. Now this model from 1 to 8 or 9 points is extremely simple. If this looks too complicated to you, then you are completely in the wrong business, and this business is not for you. I could not make this model more simple if I wanted to. Last week I made 100k. Now the more money you make, technically the more complicated the business is. Now trading is one of the hardest jobs in the world, and I have simplified this business to the point which anyone could generically learn it if they're not retarded. And some people, they love to blame their failure and lack of growth on psychology, but psychology is never an issue, because there's many other people inside of this world who work very, very hard jobs. I've worked hard jobs myself, but certainly not the hardest jobs in the world. Mentally, there is people who have to deal with end-of-life patients and watch them die every single day. There is people who work 1,000 meters below the ground mining metals that are inside of your phone. There is people who deal with sewage inside of the sewage drain. Now these jobs are mentally on a whole different level. All you have to do is monitor a chart, execute price when you understand the time is right and it meets the model. Now this in itself is not hard at all, and if you can't decide the difference between entering the model and gambling outside of the model, then this business is simply not for you, and you need to go to the sewers and start cleaning, because there's people like me and people like some of you who watch this video who are in to make some serious money. And if you're not in to make some serious money, you're more of a gambler than a businessman. So let's dive into the next slide. So many of you are wondering, how do I get to the point of making 13 to 15k per trade? Well, it's extremely simple and it takes time. You are not going to get to the point of being max allocated on all of your funded accounts overnight. The best way to approach this is to set goals for yourself. Now, don't set goals upon goals upon goals and say, this is where I'm going to be in 3 years. I'm going to take this step to do this step to do this step. Your brain does not work like that. It's going to get extremely overwhelmed, and it's going to lead you to just caving in and going back to square one again. You want to set realistic, simple goals that your brain knows that you can achieve, and once you achieve that goal, you move on to the next one. Start with 1 to 2 50k accounts with Top Step. This is only going to cost you around $100. Then once you get funded on these accounts, the activation is going to be around $150, so you're around $400 in at this point. Now, with these 2 funded accounts, you are going to trade them following this risk management. You're going to be risking $300 per trade, every single trade you take, aiming for for a 2-to-1 risk to reward. Nothing more, nothing less. Now, when you take a trade, you are not going to be surprised by a loss which you've not seen before, because every trade you're going to lose $300 or you're going to make $600 to $650. The only thing that will change and be a variable is how much you make. So if you're on a 2.2 risk to reward for one trade, or a 1.8 to 1 risk to reward on one trade, of course, one trade you'll make $550, the other trade you'll make $650, $700. That's going to be variable. The amount you lose is relatively always going to stay the same. Now, once you trade the model and follow this risk management on 2 accounts with Top Step, you are going to build your account balance over the space of 3 to 4, 5 weeks into a profit of around $3.5 to $4,000 in a profit. And then you're going to take a 1.5k to 2k payout and apply for more capital. So you're going to go for 3 more or 4 more accounts with Top Step, depending if you bought 1 or 2, to be max allocated. Then you're going to apply for My Funded Futures, Alpha Futures, Take Profit, FDMO, and then we'll get onto the live account in a second. Now with that, you're going to be on the evaluation phase again. So this was your first goal, this was your second goal, now you're setting your third goal. So your majority of accounts are on evaluation phase, and you're going to trade them normally. With higher risk than this, on evaluation you want to be risking around $450 to $500 per trade and look to pass it faster. You do not want to follow this risk management on evaluation. You want to try pass it faster. We're not here to waste any time, we're here to make some money. Now with these accounts, after realistically 2 to 3 weeks, you would have passed the evaluation and you're going to be left with 18 accounts overall, 18 50k accounts. Now I don't advise that you go with Apex, and these are the prop firms that I know will pay you out, because I know the ins and outs of the prop firm space, and I know the co-founders and the people behind these prop firms and the people who have been paid out from these prop firms, including myself. This alone will get you to the point of making 13 to 15k per trade. Now the step forward to scaling up to 20 to 30k per trade is very easy. You trade these accounts to a profit of 4.5k per 50k account. Once you get to the point when you've built up each 50k account, which you have displayed here, to 54,500, you double your risk management plan to the point when you're risking 10 micros with a $600 risk, 12 micros, $600 risk, 16 micros, $640 risk. And now on a 2-to-1, you'll be making 1.2k to 1.3k per trade. So your income is going to double. Now you can apply and choose to apply for FTMO on a 200k account and then apply for the capital increase up to 400, and you will be able to pull an extra 4 to 10k per trade off that as well, with a 10% overall drawdown on FTMO, which is great. With the payouts you receive from prop firms, thinking about longevity and scaling up in the future and moving away from prop firms, which is the overall goal for yourself, is to move the money into a live account, Tradeovate live account, or a broker of your choice. This is the one that I personally recommend. How do you manage all of these accounts at once without clicking 15 buttons to enter into all of your accounts? Well, you can use tradesinker.com at the bottom of this PowerPoint if you choose to do so, and you can group all of your Tradeovate accounts. Unfortunately not Top Step, that is a prop firm that you're going to have to execute manually yourself on Top Step X, so use the copy trader on Top Step X. And then for My Funded, Alpha, Take Profit, you can group these 3 together as they use Tradeovate and put them in on TradeSynker, and then it will be group traded along with your live account as well on TradeSynker with the prop firm accounts, which is great. Hopefully you guys understand the funded and scaling plan. Now let's dive into the next slide. So now we are going to dive into the charts of exactly what you guys want to see inside of this video. We're going to put it all together so it makes complete and utter sense and you have a game plan for the week ahead. This is a business that does not convert overnight, as we've already stated. No one is going to be able to take this knowledge away from you. You could do 5 years in jail, come out of jail, and still have this knowledge. It's the same as anything in life. If you learn how to box, you are always going to be a boxer. If you learn how to swim, you are always going to notice the person who can swim and the person who doesn't know how to swim. This is something that you never lose. Now, with the knowledge, you then need to convert this into actual money with the process and the steps that we have provided inside of this video. One thing and one piece of advice that I have for you guys watching this video behind the screen is that I want you to take this process slow. Slow everything down. Life is very, very simple, and everyone around you loves to overcomplicate it, stress the living shit out of everything when it is not necessary at all. You need to think with a clear mind. You need to have a structured approach moving forward, not erratic, not left, right and center, but straightforward towards your goal with a structured plan which is realistic, not a crazy plan, that you know you potentially can't achieve, a plan that you know you'll achieve. And when you achieve it, you're going to achieve the next one and the next one and the next one. And then you'll look back to where you were, and where you are now almost looked unachievable from where you were. But you made the small little goals which accumulated over time into one very big success. So now we're going to dive into the charts and break this down. Let's get straight into it. Okay, so now we've dived into the charts. Let's get straight into the first trade of the week on Monday, the 11th of August, inside of the first day in macro. Now I will drop on the screen as of now my execution from one of the accounts so you guys can see my entry price, exit price, etc. So first things first, we mark out the key levels on the day on the 15-minute time frame. So let's get that marked out, and whatever you mark out on NQ, you want to mark that out on ES as well. So very obvious high here. You can see this is going to be Asia highs because it is at 11 p.m. And then of course a very obvious low is going to be London lows at 4 a.m. Then we also have a set of London highs at 3 a.m. So the London session runs between 2 a.m. and 5 a.m. and Asia is between 8 p.m. and 2 a.m. So the other levels that we'd like to mark out is obvious highs on the 15-minute time frame. Now this is not a time-based high or low, just simply obvious points in price that have been taken out. Now you can see we've already come back to a discount of this intermediate move higher, and we've swept this point of sell side. Now if we do determine a bullish bias, potentially we can look for longs towards London highs and Asia highs. Some of you did not take this trade because we was in the middle between London highs and London lows, and some may believe this to be a sketchy or difficult trade to actually identify. However, there was still a sweep of liquidity and an obvious directional bias for this trade. Now whatever you mark out on NQ, make sure you mark this out on ES as well. Okay, so now we've simply marked out the levels on both NQ and ES. We're going to determine our overall bias based off imbalances. So on the daily time frame, you can see we're currently not inside of any imbalance. We're not in a bearish gap or a bullish gap. So the bias on the daily is neutral. So now let's look at the 4 hour. On the 4 hour time frame, we're currently trading out of a 4 hour bullish gap. So the draw is going to be the next high or bearish gap. There's no bearish gap, so the draw is the next 4 hour high, and the 4 hour is bullish. On the hourly time frame, you can see we had an hourly bearish gap. It got inversed, so the draw is automatically higher, and also we're trading out of an hourly bullish gap, which you can see here. So the hourly is bullish towards the next bearish gap or high. Now there's no bearish gaps, so the draw is this high for the hourly. Once we take this high, the bias on the hourly time frame will go to neutral unless we trade into an hourly bearish gap around this level, which there isn't. So when you take the high, the draw goes from bullish to neutral. Or if we had a bearish gap here and we met that before the high, then it would go from bullish. If we trade into a bearish gap, then it would be bearish, but there is no bearish gap, so the draw is the high. On the 15-minute time frame, you can see price traded up into a 15-minute bearish gap, so you would initially be bearish. The draw is lower towards the next 15-minute swing low or bullish gap. Now the bullish gap came first, we traded into it, so the 15-minute is bullish. And then finally, the 5-minute. On the 5-minute, we're currently not inside of a 5-minute bearish gap, and we're also not inside of a bullish gap. So the bias is neutral on the 5-minute time frame. Now when you have a neutral bias on one of the time frames, you can delete them off. As I said at the start of the video, neutral bias is like shooting a gun not knowing which way the barrel is, so we can delete them off as they have no overall direction or reasoning. So our overall bias, as you can see here, is 100% bullish, which is very straightforward. So following the model, we want to see a sweep of liquidity following a bullish bias, which is a sweep of sell side. So we've swept sell side, which you can see here, and prices come back to a lower time frame discount of that move higher that we previously seen. Now, step number 3 is that we want to see a shift in market structure, which as of now, we have already seen above the previous short-term high on NQ, and ES is displacing above that previous short-term high. Now, entry must be inside of macro, which is at 9:45 to 10:15. So let's fast forward price. Okay, so approaching the macro, you can see we've had a further displacement above this previous high. So you can call it displacement or market structure shift. It is the same exact thing. This candle here caused the displacement and created a gap at the same time. We call this a breakaway fair value gap. So you can label this as BAG. And to the left, we have a bearish order block, which has now been inversed after taking out the low. So this is a bullish breaker block, which is paired with the fair value gap. gap. So that's another thing on the checklist complete. So we have a breakaway gap paired with a bullish breaker block, a market structure shift on both NQ and ES. ES also has a breakaway gap, which is paired with a mitigation block on ES. So a mitigation on ES, a breaker block on NQ, which is perfect. So bullish bias, sweep of sell side, a displacement, a breakaway gap paired with a breaker block. An entry inside of macro is now what we're looking for, and it is as simple as that. So let's fast forward price. Boom. There's your entry at 9.45. You can see we caught an entry long off this fair value gap. We're going to run a stop placement at the low of the breakaway gap, which you can see there for 18.25 points. And we're going to target the first 1 minute high that gives us a 2-to-1 risk reward. You can see this high does not give us a 2-to-1 risk reward. So we are indeed going to have to target London highs as the overall draw for a 2.23 risk reward. So now let's watch how I manage my risk. Okay, perfect. So price has taken out that first short-term high, which you can see there, and the trade is not over 50%. So what we're going to do here is just simply trail our stops slightly to the previous short-term low, because we don't want to be too aggressive with trailing our stops as of now, because we're still relatively close to break even. Okay, so as you can see here, price has protected the trade, and in the algorithmic trade, price should respect every bullish PD array until we meet the final objective. So I'm going to now move my stops to the low of this candle that created this bullish imbalance, as price should respect every bullish PD array, including fair value gaps, mitigation blocks, breaker blocks, etc., until we meet the final objective. Once we take a short-term high past 50% of the trade from break even to completion, then we can head towards break even and start trailing our stops into a profit. Okay, so you can see there we've taken out this short-term high, and price is now accelerating past 50% and heading in towards our overall TP. So now we can trail our stops to break even. So now the trade would be completely risk-free. And then you can see here, this is a breakaway fair value gap. So price displaced above this previous short-term high, creating a gap and a displacement candle at the same time. So now we can move our stops to the low of this breakaway gap. And then upon price taking out that next short-term high, you can trail your stops to the low of this candle, and then price ends up actually going all the way towards our TP for London highs. So hopefully this example makes sense on this day, and this is the exact trade that I took. My entry on this trade was actually a little bit later at 10:01, as I missed the first entry because I was on a very important call, but I still secured the trade all the way towards London highs. So now let's get into the next example of the trade on Tuesday. Taking a look at Tuesday, we want to mark out the key levels and have the same approach as the previous day. So let's get on with that. So now we've marked out the key levels on the 15-minute time frame: previous day high, Asia lows, previous day low, sell side, and obvious points in price. We are now going to determine our overall bias. So starting on the daily, you can see we're currently not trading out of a daily bullish gap or a bearish gap. Therefore, we're going to take a daily bias as neutral. On the 4-hour time frame, we assume a fair value gap is respected until disrespected. This candle on the 4-hour time frame is still open, so we're going to assume this 4-hour bearish gap is respected until it actually closes above and disrespects it. Now, on the hourly time frame, you can see that we're not in an hourly bullish gap and we're not in an hourly bearish gap, so our bias is going to be neutral. Now, on the 5 and 15-minute time frame on this specific day, I did not take them too seriously, as this imbalance here was purely caused by CPI news at 8:30 AM, which is not a legitimate fair value gap. So I did not take my overall bias on the 5 and 15-minute on this day as serious. The bias in this case would be neutral, because at the same time this candle is trading out of a 15-minute bullish gap, so the draw is higher, also trading out of a bearish gap, so it's getting pulled both ways, therefore it'd be neutral anyway. And on the 5-minute, we was trading out of a 5-minute bearish gap which got inversed, therefore the draw is going to be the next 5-minute swing high, which has been taken out. So the 5-minute is currently neutral, which you can see there. So with 4 neutral results and 1 bearish, our bias is bearish based off the 4-hour time frame. So with a bearish bias, we want to see a sweep of liquidity, which we've already seen. So we've swept previous day high and we have an overall bearish bias. So now step 3 is that we see a shift in market structure below a short-term low. And then on this specific day, on the lower time frame, you can see we have a set of equal lows, which is going to be a major draw for price. And we also have data lows. So the macro is in 1 minute's time. So let's see what we get. Okay, boom. So a huge shift in market structure. We have a fair value gap on both NQ and ES and a displacement on both, which is perfect. So we have an overall bearish bias, a sweep of buy side liquidity, which is previous day high, a shift in market structure, a fair value gap, which is a breakaway gap on both NQ and ES, a bearish breaker, and now let's see whether we get an entry inside of macro, stop placement at the high of the breakaway gap, risking 41 points. So you want to reduce your position size but still risking the same dollar amount on this trade, and then targeting the first 1 minute low, which you can see to be data lows, for a 2-to-1 risk to reward. So whichever 1 minute low gives you the closest risk to reward to a 2-to-1. Let's see if we get an entry. Boom. So that's our entry for price. We would be short, running our stop placement there, and our TP just above the lows. Okay, so price heads towards TP and takes out that first short-term low, and because this first short-term low is still in very close proximity to break even, we are going to trail our stops to the previous short-term high. And then we've created a second breakaway gap. However, there is a small fair value gap just resting above it, so I don't want to trail my stops too aggressive, but I'm going to trail them to break even. Price gets very close towards our TP and just a couple ticks from data lows. So at this point, I would trail my stops slightly more aggressively and move it to the breakaway gaps high, and then boom, there you have it. The trade on Tuesday, TP got absolutely destroyed. And if you didn't feel comfortable taking that short, shortly after, there was a very, very clean long just after. Price displaced above this short-term high on NQ, creating a breakaway gap. On ES, you can see price displaced above this previous short-term high, inversing this order block, creating a breaker block paired with this breakaway gap, sweeping data lows and equal lows with a higher time frame bullish SMT at data lows and equal lows, which you can see there, and an overall draw towards the previous point of buy side, and price ran all the way to TP. And I know people who took both shorts and longs, so it doesn't matter which trade that you took, price was very giving on Tuesday and gave you both the opportunity for longs and shorts. So now let's dive into the trade which I took on Wednesday. So starting on the 15-minute time frame on Wednesday, you can see price is in a deep premium, actually trading at all-time highs. We've already swept that point of London highs, which you can see there, and some people do say trading at all-time highs is very dangerous and difficult to trade. I find it very easy because once you have your model down, nothing surprises you, and every day is the exact same process. We have swept London highs, we have a draw for London lows, and price is in a deep premium, which you can see as of now. On the daily time frame, our bias is going to be neutral because we're not in any fair value gaps. On the 4 hour, we are neutral. On the hourly, we are neutral. On the 15-minute, we are neutral. And on the 5-minute, we are also going to be neutral here as well. So our overall bias approaching the macro on Wednesday is completely neutral, and price is in a deep premium. So let's monitor price up into this first day in macro. Okay, so boom, at 9:55 a.m, price displaced lower sharply, but you can see here on ES, following a neutral bias, I didn't want to take a trade considering that ES did not even displace at all. So clean displacement on NQ, etc., but no displacement on ES. Therefore no trade. And then boom, you can see here price displaced lower on both NQ and ES after taking buy side, leaving behind a mitigation block paired with the breakaway fair value gap. So the overall bias on Wednesday was very difficult to determine and was overall bullish on the 5 and 15-minute time frame. However, on the 4-hour time frame, we had a draw for this unfilled 4-hour bullish fair value gap, which you can see here. So upon taking this trade, I seen it with my experience very, very obvious that price was going to draw lower towards all of these recent equal lows, London lows, Asia lows, previous day low, etc. Upon with a clean displacement lower, a mitigation block with a fair value gap, and a clean stop placement, I took this trade. Now, my bias on this trade was definitely not there, and this is one thing that I never go against, and it's very important that when you do take a trade, you make sure that the trade completely follows your bias. And yes, this trade did make me over $25,000, but it's very important that when you enter a trade, it meets all of the requirements. I ran a stop placement close to the previous short-term high and targeting the first 1 minute low for a 2-to-1, which ended up being this 1 minute low to the left. And you can see we're getting a 2.23 risk to reward. So I waited for an entry off the fair value gap on NQ. So that was my entry, and I took this short with 12 contracts on my live account. So let's fast forward price. Okay, so after taking out that first short-term low, which is not over 50% of the trade, I moved my stops to the previous short-term high, minimizing risk to only 4 points. And then you can see here we created a breakaway gap, therefore I moved my stops completely, entirely to break even. And then price took out the next short-term low, and I trailed my stops to the most recent short-term high. And then boom, there you have it. TP smashed once again. That was the trade that I took on Wednesday. And then the trade on Thursday was very self-explanatory. I'm not going to get all the way into into it, I'm just going to show you guys more briefly. It was inside of the second day of macro. It was a very clean example, and I'm going to show you guys briefly the reasoning behind taking this trade and why this would be a very good trade to take indeed. I didn't personally take it myself. I was in yet again a very important meeting, and I took 3 trades this week, and they were 3 out of 3. I missed this trade, and this was the only trade that I missed as of last week, but it was a very clean trade. The first day of macro is here, and there was no opportunities. The second day of macro came up, swept data highs from 8:30 news event, and swept many points of buy side liquidity. At time of entry, you can see price is trading out of a 4-hour bearish fair value gap. On the hourly time frame, we're trading out of an hourly bearish gap, so we're bearish on the hourly and the 4-hour. On the 15-minute time frame, you can see that we're trading out of a 15-minute bearish fair value gap, so the 15-minute is also going to be bearish. And then on the 5-minute time frame, we're currently neutral. So the overall bias completely on Thursday in the second day of macro was bearish, and we've swept data highs, which was that news event that came out at 8:30. We've taken out all of these points of buy side liquidity, and same goes for ES as well. So basically monitoring price inside of the second day of macro, you can see that we had a very clean shift in market structure, many draws for other lows for price in a discount, an entry on the first presented fair value gap, looking for an overall 2-to-1 risk to reward, stop placement above both of these bearish fair value gaps, and a TP targeting the first 1-minute low that gives you a 2-to-1 risk to reward for 2.44 risk to reward. This trade has absolutely everything in favor of it. Taking out the first short-term low, stops to go to the first previous short-term high, takes out the next short-term low, you control your stops to the more recent high. Price creates a bearish gap in favor of the trade, so that should be respected. We can move our stops now towards break even. We take out the next low aggressively, which you can see there. You trail your stops to the previous short-term high, and then boom, price absolutely obliterates and destroys TP. Now guys, this was one heck of a video, very long, very detailed, and if you made it to the end, honestly, you are changing your life as you speak. Make the correct decisions moving forward, take it slow, and we have a good week and a good month ahead of us. Now I hope this video was useful and you took things away from this video. If you did, drop a like on this video so we can share this video out to people that need to see this and introduce to a new audience. Subscribe to the channel if this is the first time you hearing my voice, and for future videos on this channel guys, drop a comment for any future suggestions and video ideas on this channel. Let me know in the comments, and until the next one, have a great rest of your weekend, and I'll speak to you guys shortly.